Hello, hello. How we doing tonight, everyone? It's been an aggressive start to the week, let's just say it like that. And I say start to the week because, of course, I was not trading before yesterday. But FOMC today made us move a shit ton. I'm doing great, Alex. Thank you. Well, we'll get right into it. Of course, today was FOMC. You guys know how I like to handle it. I don't like to trade before it. Now, this is somewhere in the trading space where there are a lot of differing opinions, but I prefer not to trade before it. I prefer to look for high probability opportunities after Powell is done speaking, whoever the Fed chair director will be next. So if we just go right down actually to the 15-minute, no need to spend time on the daily. Well, I mean, we actually could, just going on the daily, we can clearly see we had a retracement into our range, and more specifically an order block we had. Why? Because it is overlapping with the fair value gap once you include the volume imbalance. So you had a level, but you guys know how I like to do things. I don't like to draw the random level afterward. How could I predict this level? Well, I personally use premium and discount. Now, this level is far in premium. Of course, I don't expect price to retrace all the way down. Why? Well, we talked about it yesterday. We are trading at all-time highs. We are bullish, so bullish until proven otherwise. So I expect any sort of bullish array to be respected. So I don't look specifically at this one. I look at all of them, right? I look at this fair value gap. Then I look at this fair value gap to offer me a setup. And then I look at this order block. And if we trade further, then I look at the next order block. And then I would look at the next array, which in this case would be another order block, right? I don't like to spend random time just telling you guys, oh, how could you have predicted this? Don't waste your time doing that. There's no point. And there is honestly no need. So, of course, looking at today specifically, we can see clearly both sides were offered, right? We open traded a whole lot lower and then retraced a whole lot higher. Now, let's go talk about the setups that were offered because there was a lot of divergence today. So if we go right here, just to see the current day's price action, what do we very clearly see? Well, first of all, nothing. Truth is, we don't clearly see anything. It is very, very unclear. Why? Because there is a lot of divergence. So of course, very clearly the day's opened and traded a slight bit lower, but already we can see divergence popping up at the current high of day with NASDAQ taking out Asia high and just the overall current high of day at that point, while ES did not. So already we have SMT at these levels. And then if we look further, we formed SMT or London low right near the morning session, right near 10:30. So on right near 10 a.m. actually, because we can see NASDAQ taking out London low plus current day's low at 10 a.m., while ES is nowhere near that level. And even though it did reach it in the end, there was a lot of divergence. At that point as well, there is also divergence at the highs. Let me see it. So this is the divergence that was also present. And this one specifically is at the open. I will not get you on right away, Spoof. What I was going to say is that there was a lot of divergence at the highs right there. So if we, oh, yes, it doesn't want me to go down to the 15-minute yet. And also something I didn't want to point out, at the time of our news, we had further divergence with the highs. Going down to the 1 minute now, it's finally loaded. That's fun. We can see a lot of different information. So first of all, yes, there are possibilities to trade before FOMC. As you can see, the first breaker that was formed after 9:30, right? There's this bullish one. But now I can see that after the fact, I don't want to see it, right? Right at 9:30 is on this candle. We had Judah swing. We had our SMT with current day's high, all of that. The highs that took out, that did not take out London. Right, so very important SMT in this area that would have offered a very easy short. Now, after the fact, it's very easy to spot this, okay? But for me, it doesn't change my rules. I don't want to be trading before FOMC. And you might have seen, actually, this would have been a break even for me. I would have probably partialed along the way here and then got stopped out break even after such a huge retracement into our range that definitely was not necessary at all. It's actually what formed the SMT right at the open as well. So overall, there are some opportunities to go short, of course, at the open, but that's not what I'm interested in. What I'm just interested in, is right here. And let's actually, let's do this. This is my 2 p.m. open. So this is where I start focusing in, tuning in whenever there is FOMC, because I expect a two-step delivery. I'm going to be focused on 2 p.m. and on 2:30 p.m. And I will not be looking to trade before 2:45. This is my very simple framework. Well, I say very simple, but it might be a little bit complicated for some. But as you can see, these are the areas in which I'm interested in. Let's do the same thing here just so we can follow along. So first off, I'm looking at an initial injection of liquidity. That is often related to manipulation. In this case, we had a short-term move higher, right, to initiate this move lower. But now I understand that FOMC is a two-step delivery. If you're unfamiliar with this, this is something that I learned from ICT Concepts directly. So if you're interested in learning that, there are a bunch of good resources online. I would definitely go at the source, but it has never treated me wrong specifically for FOMC. As you can see, we had an initial stage. Look at this as a candle. We open, formed a high, formed a low, retraced to a close. But now 2:30, when Powell starts speaking, right, when the press conference starts, is when you start to be really interested. And at 2:45, and let me actually move this, 2:45 for myself, I like to give myself 15 minutes for the charts to offer its manipulation. And as you can see, during that time period, all we did was go lower. Of course, we can see on ES right here that we formed a bearish breaker and a unicorn. Also did on NASDAQ. I just have different settings here, as you can see. But if I do 2:30, just so you guys can see, we formed bearish breakers. Actually, another one here as well. That would have offered a unicorn short. But as I said, I'm always waiting 15 minutes after the news to take a trade. Now, something I did notice today, though, well, you know what? One thing at a time. Right here, afterwards, right? Why would I look to long this? Well, all we've done all day is form SMT at the highs and keep going lower. Sure. But is there also potential upside? Well, at the time of the news at 2 p.m., there was also SMT here. And we had a huge move lower after the news. So let me just mark it out so you guys can see approximately, of course. But right here, we had a huge move lower. And now I was framing a potential retracement. And when looking to the left, what I look at is equal highs, low resistance liquidity. So even though there are SMTs at those high, I understand that the real move should come from FOMC. And that the news is related to manipulation. The news caused price to go lower. So if I'm looking at this as a manipulation, what we can also call a fake move, then the real move will be higher. Of course, this is a lower probability trade. Why is that? Because there is a lot of SMT counter to your idea at specific times, right? So what do I do in these cases? Do I not take the trade? Well, that is one option. One option is to not take the trade at all, close your charts, and wait for a better opportunity to come on another day. For myself, it was good enough to consider a trade, so I went half risk. Now, you might see here that there are no entries for long, right? There are bullish breakers, but there's no retracement into a unicorn. But actually, there is if we bring into consideration this inversion fair value gap. Now, you may ask, why did your indicator not consider this inversion fair value gap, Ollie? Well, it's very simple. It's too far away from the breaker, right? In terms of handles, in terms of points, right? My overlap threshold here, which is the maximum distance away from breakers to consider gap overlaps for our unicorn fair value gaps, well, it's 12 points. But we were in a very volatile day. So on any given day, you might see this and be like, okay, well, this whole move is 100 points. Well, it is 270 something, right? 271 something. So very volatile means that it shouldn't be a rule about points. And that's what I realized and will actually be updated this weekend. So if you guys are Rice Statistics users, well, you'll be very, very happy to know that for unicorns, there will now be a dynamically weighted overlap threshold, which you will be able to set yourself as well. You'll be able to set a multiplier to that threshold. So smaller will be very precise and larger levels will be very wide, but it will be dynamic, which means that it won't depend on a specific distance away, but more so proportionally. So if the last 20 candles have been very volatile, in that case, I want to give myself a lot more room because I expect continuing volatility. And so that's why today I took this specific trade. We inversed the fair value gap on this candle, and 301 right here gave me an entry. Now, if I was to use my 3 PDRA stop loss rule here, I'd have this inversion fair value gap, then this fair value gap, and then this fair value gap, which would bring my stop all the way down here. Now, don't get me wrong, there's still potential upside with this, right? The first clear objective will be London high, which is also current high of day. And I mean, this offers great risk to reward. But for myself, since I was half risk, I want more risk to reward for this trade. So it's really due to the amount of money I was risking that I decided to go for a different stop loss. And anyways, if price traded back down all the way here, I was no longer interested in this long. I don't want an 80-point stop, right? It might be a very volatile day, but I never want to go this high on a stop loss. So for myself, I decided to bring it up to this candle's low. Now, 56 points is still a super huge stop for my average, but it allows for a lot more upside, and it is still within an, what's the word for it? Within an okay average, I guess, for very volatile days, right? I don't know if you guys were trading during the huge volatility that came with the elections, right? Just near the end of last year, but we had some huge stops. My average stops came to around 46, 47, I believe. But it was okay because the moves were also 400, 500 handles. So if I'm expecting a potential 150-point move, I don't want to give myself the limit of being 80 points and that being able to get 2R out of this move. So I just wanted to explain my reasoning behind it. But overall, this is not a setup you should long for, right? It is not an A+ setup, far from it, which is why I was half risk. And due to that half risk, I decided to trail my stop more aggressively. I was okay with losing my $250 instead of $500, for example, to just have the potential upside of making 1 point something R realize, which would be my regular risk. And for Emling, as you can see, we went up right away. I decided to go break even right away as well. You might have seen here, I was pretty much up to R, but my first partial was at this high right here. I was looking for this high specifically. Why? Because it's a high of the first impulse, right? We were just talking about two-step delivery for FOMC. So in that case, this was a very important data high for me. It is also where we had SMT with ES at the current day's high, right? If I bring my little dot here, well, this is what formed the high on ES. So we did have SMT right here as well, but we had SMT at the time of the news here as well. So as soon as we take this out, all of a sudden, there is huge SMT between NASDAQ and ES, right? Which is basically right here. This is where the SMT formed. And once you look at it, it formed a high on ES and NASDAQ for the rest of the session. So overall, great spot to take profit. Since I was almost there, I decided to go break even. And as you can see, we still reached that level. Of course, I took barely any partial here because I was expecting it to run right away to London high and current day's high. You might have seen my narration in chat, but as soon as I saw it slowing down when it was almost at that high, I just took profits. So I took profit about at the midpoint of that candle. I prefer to not get 7 3/4 of a handle instead of risking my entire profit on this position. It has happened to me so many times on these indices futures, especially even when there's no SMT, that we just induce a level, retrace 150 points, and then go back to it. But was it worth going through all of this just to get there? In the same way that here, was it worth not taking partial here and holding through all of this just to get there? just to get that extra tiny bit of movement? No. But here, I went to pee. That's the truth. I came back and I saw that 2 minutes later, we were all the way down here. So I was like, oh, well, now it's too late to take a partial. My partial's here. It's okay if I take my partial here and I lose out on a potential of almost 15 handles, which seems big, but on a day with volatility like today, it is very small. And I would urge all of you guys to follow that specific rules, because you will get burned so many times. Like, just look at me right now. I took partials here. I trailed my stop, trailed my stop, trailed my stop at this level, and got stopped out right here. I'm much happier taking partial here and getting stopped out in profit here than if I only had one partial and then the rest of my position just gets stopped out in profit. So just a little advice on trade management here when you're trading specifically the indices futures, because they do tend to do this quite a bit, especially in a condition where, hey, there's 30 minutes left of trading in the session. You shouldn't be expecting too much. As you can see, up until 4 p.m., not much happened. We, of course, had a final little run higher, but nothing crazy there at all. Now, we can discuss this short right here, which is also being considered a long unicorn. In case you're wondering, that's why the color is weird, is because it is green over red. But it is also a short unicorn. We formed a breaker block here. We never retraced into it, but we did retrace into this inverse fair value gap. Now, your stop would be at the high of this fair value gap. Why? You have inverse fair value gap, inverse fair value gap. So your stops are right here. Very, very straightforward. But in this case, you might see it would have been unsuccessful. I would have definitely looked for at least a slow. Truth is, taking a an end of day short retracement, just short or even long retracement, is very low probability. Short even more actually than long. Why? Because it doesn't have to retrace. It could just consolidate. At this point in time, there's not enough time for you to have a profitable trade most of the time. So why would you even take a trade at this point? I understand it's FOMC. Okay, well, FOMC, my trading window is pretty much, 245 to 315. I'm never going to be looking for something after that because, as you guys might remember, my average time to hit my partial is 1 hour and 3 minutes, actually. If we're being specific, 66 minutes, which means sometimes I get super quick partials, sometimes I get super long partials, but it averages down to 1 hour. So if I have less than 1 hour of trading available in a day, yes, it does mean that it is not worth me taking a trade because the odds are it will not reach my partial. This is the most simple display of statistics that I can give you guys and how I personally use my own executing strategy, my own executing data, to become a better trader. So no, this short, I was pre-firing it, would not be valid in my book simply due to the fact that there isn't enough time. Also, you just induce London high, even if there's SMT in this area due to this high, right? What we just outlined here, it doesn't mean it's any better. You still induce this liquidity and have a high probability of returning to it. And you guys, if you guys looked at the open actually, which right now we're in replay mode so we can't see it. If you guys actually looked at the open, we instantly ran to those highs. Overall, you had a long opportunity. Was a little risky being so far up in this range. But if you guys remember, implied dealing range right here. And quarters, not quarters, let's do implied DR. But that was not my objective. My objective was London high. So if you look at this, my entry PD rate is at 0.5. So it still was a valid entry for me. But we did not reach this level. And if you used it here, well, in that case, that would have been a little bit too late. But that's always how what I use to find if my entry is too late or still valid. In this case, it was barely good enough. We have any questions? And I'm happy to answer questions, by the way, guys, before FOMC in any sort of way. I personally choose not to trade it. I don't find it's worth my time, to be completely honest with you guys, because it is so inconsistent in what it does. It's not a question that it never expands or never provides good setups. I mean, I could have made like 3 or 4 hour in the morning very easily. But it's more so in the sense of inconsistency. But I'm happy if you guys are trading that to answer any questions you may have. So good to get back to the charts after a vacation. Just have 2 wins. Just like making it easy for me, NASDAQ. And I'm not seeing any of you guys type, so I'm guessing it was all clear. All right. Well, on that note then, guys, we're going to call it a night. Thank you. Appreciate that, Dillions. Definitely nice to be back with you guys, right? Reviewing these charts. I mean, it's as much something for you guys as it is for me, right? It's a great way to showcase value through the Discord, right? And keep you guys engaged and all that bullshit. But the truth is, it's a great way for me to review my day, my performance, and what I saw. Because I remember what I saw live, and now I see it after the fact, and I'm like, do I see anything different, right? And that's how you actually do that. No worries, I won't rush you, Dillions. I'm happy to wait for your question. I want to start trading futures after trading options. I don't have any knowledge of options. That's the truth for me. Why are you scared? Explain to me in 1 to 3 simple steps. What scares you? Trading is scary. You're going to be risking capital. You feel it isn't the same. Well, as I said, I don't have much knowledge of options. I know some people in options just trade volatility, right? And volume. And I know some people trade end of day expiry options. Sometimes people trade multiple weeks at a time with options. Like, there is so many layers to options, right? And I mean, I use them in my personal investment portfolio as a hedging capacity, but I never traded options, for example. No more time decay. That is one thing that you don't have while trading futures. Where to start, how to buy a contract, or which is best. Very simple, all right? Whenever you're investing, let's just talk about stocks, all right? Millions, like, investing is something that a lot of people learned in school, and just overall, some people have random amount of knowledge about it, understood, but there are some key factors that a lot of people know, all right? So what you can understand is that when you buy a stock, I buy a share. Now, if a share is worth $200, right, and I invest $200, I own a share. And then, of course, some will give you less than a share. Sometimes you have fractional shares that you can go through side tickers or whatever. But let's say I put $100 into Apple. Well, I'm not going to have a full share, for example, right? So what is that? What does that represent? Well, futures is the same thing, but we call it contracts. And each contract has a specific value that is point-based. What is a point? A handle. It is what you see right here. So that number right here is ticks, right? So increments, pretty much. And that number to the left is points, handles, right? You're probably familiar with that, but since this is going on YouTube, I am going to go the long route, right? And of course, 4 ticks make a point. All you have to know is the contract value, and that will give you the value per tick or the value per point, which is a full 4 ticks in this case. Any futures contract, you have a value established to it. So instead of saying, hey, I want to risk $200, right? Let me just buy, or let me just place a sell order of $200 on this stock. Well, now the difference is you have to go off of contracts. So the hard part about trading futures, at least for me, and it still is, one of the hardest part is risk management at the time of execution, right? So it's understanding how many contracts do I need right now. And I mean, you can have a calculator right next to you and do it pretty easily, or you can just go off of mental calculation, which is what I do. I've gotten pretty quick at it nowadays, but that is the main aspect that will be the difference maker, is that a contract has an inherent value. right? Which you have to understand. So if my stop is 56 handles, I understand that I can do, let's say I'm trading minis, right? Which is the main contract, right? NQ is minis, MNQ is going to be micro NASDAQ, which just means the contracts are worth $2 per point instead of $20 per point. But right here, if I do 56 times 75, 56.75, sorry, and I do times 20 because I understand that's the value per point, then I understand that if I'm placing one contract here, I am risking $1,135. So let's say my target risk was going to be 5K, and I always have some leeway, by the way, because like, for example, right now I would just put 5 contracts. So if you do that times 5, I'm going to be at almost $5,700 risk. But that's something I'm willing to do. And some people just like to go always the one under, which in this case would be 4,500 if you have 4 contracts. Right. So hopefully that made some sense. But that is the main difference and the main thing with futures. And the other thing is that you don't have slight variations in point. The minimum movement is always going to be a tick. And on NASDAQ, that means it is 0.25, which means that people like to say futures are more precise. They're not more precise. It's just they don't let you they have a certain degree of precision by rounding price, which, sorry about that, which in my opinion does make it easier to have more precise trades due to the fact that the minimum increment of movement is a tick. So I do understand I went a little all over the place there at the end. Hopefully that was pretty clear. Just scared of making the jump without knowing which broker to use. I mean, that is something I will never really talk about. I'm going to be honest. I am happy to share with you guys what brokers I personally use, but never make recommendations unless, well, we'll see about it in the future, right? There might be some sorts of real trustworthy is the word I was looking for, players coming in the game. So I don't want to leak anything, but there might be some cool stuff coming. Those are definitely some people that I would recommend to go with, but we will see at that point, right? I don't want to give too much out right now, but I can tell you that right now there is no broker that I absolutely trust. So even the ones I have a lot of money in, so this is not something I could recommend directly. On that note, though, we're going to call it a night. I'm not going to lie to you guys. My voice is about to absolutely die. It's going to take me a week or two to get it all back. I screamed a lot in Vegas. So I do apologize if I'm a little more raspy than usual, but that's how it's going to be for a little. You guys have a great night. Good luck trading tomorrow. And of course, we'll have another PA review tomorrow night. Nice to see a lot of familiar faces and some new ones. You guys are always welcome. Glad to have you all, guys. Bye.